Okay, everybody, welcome back. Let's get wrap this up. It's been a long day. He's got some nice fresh coffee here. Is everyone enjoying it so far? Everyone having a good day? That's the most important thing. Good. Good. You're all having a good day in internet land. Hopefully you're relaxed and learning something, and it's a bit like drinking out of a fire hydrant. By the way, tomorrow we're going to bring all this together. It's going to be a great day. So tomorrow, I know you're going to have questions, by the way. So tomorrow we'll let you know from an internet perspective how you can get your questions addressed if they haven't been addressed here today. Obviously, we've got a lot of people on the link here, so we'll try as many questions as we can. Couldn't do the whole day in real time. It's a very good new material. Good, Malcolm. Well, that's you got that. Okay. All right. So let's get underway. Part 4 of today's seminar. I've had some great feedback about David. So, David, well done. That was very, very good. We all enjoyed that. Now, Steve is going to talk about VSA. And Steve, just give you some background, has been working with TradeGuider for about 8 months now, and is a customer. So this is a success story right to my left here. Now, I had never met Steve until a couple of days ago, and I was often asked, actually, by customers, how on earth would you put someone in charge of a live trading room, put your brand all over it without ever meeting the person? And the reason I would do that is because I'd heard Steve on the internet, I'd watched him trade, and actually watched him trading, but most importantly, I watched how his knowledge of VSA had been picked up. So if you want to know how to really learn volume spread analysis from the start, this is the guy to talk to, because he's done it, he's proved it, he's walked the walk. Tom Williams himself has seen him trade. I mean, this guy trades real money, live in front of a group every day of every week. Yeah, I don't think he takes a holiday. He loves it so much. No vacation time for Steve, and I've told him for the 5 years there'll be no vacation at all. That's part of the contract. Did I not? Oh, I didn't mention that to you. Okay. So without further ado, welcome, please. Big round of applause for Steve Phillips.
Thanks for that, Gavin. Check 1, 2. Can everybody hear me okay? I'll get my microphone all dialed in here.
Good.
Yeah.
Got it?
There we go.
Yeah, they're good. Everything you want to watch, just make sure that doesn't hit that.
Gotcha.
Okay.
So how's everybody doing on internet land? Can you all hear me okay?
Hi, Steve. How are you?
I'm doing well.
You just speak up a bit, Steve. Okay.
I'll try to pronunciate a little louder, a little higher pitch voice maybe. So yeah, I've been trading since 2005, and kind of got chopped around. Unfortunately, I did real well at first. Didn't really know what I was doing, and that's about the worst thing that probably could happen. So then I met Tom and through a webinar, and it really lifted the fog. Widespread up bars I was chasing, and I heard him say, "Oh, well, that's selling." So I stopped everything, backed off, and said, "Okay, every time I see a widespread up bar, I'm going to short it on paper. Every time I see a widespread down bar, I'm going to go long." Well, what had happened is I started seeing phases, and I thought, well, it's not always selling, but there are particular times they're selling. So when is that happening? That's what I'm going to talk about today, really honing in on widespread up bars, widespread down bars, how that affects the right edge of the chart, and we'll do some investigative work as well here. So first I'm just going to tell you what they're up to. It's just an overview of the dynamics of what's going on, and really we don't need to know why. We just need to know where we're going to be putting our orders in, and exactly where to find specific signals. So that's what we'll be talking about today. Specific things in certain areas and react to it. Anticipate and then react, as opposed to just reacting in any little movement in the market. That's a little gambling. You don't want to do that. So the background affects the right edge. Well, The reason it does affect right edge is the main players, they have to is to investigate and find out where these blocks of orders or where they're all running into. So this is how price action and emotion play a role. We'll touch on that, and this will really elaborate on that. It'll help. Use these key specific levels and then look for specific things that happen in your BS specific setups for along the way. If you did nothing but hung your hat on one or two things that you could draw from this weekend, you'll have a lifetime of knowledge to do well in the market. I'll pause for a second, a little audio connection, we're back. So why do these widespreads occur? You know, there's big blocks of orders that they throw into on the books. If they have such a massive size, they can't just rush in because, well, it's going up. It's going up. I better start buying some more, buying some more. Well, they've got such mass quantity, they're just going to keep pushing the price up against them. And, well, that's bad business, you know. We don't want to buy highs and sell lows. So they resolve this issue by leaving blocks of orders in certain areas, and they'll rush up. And if you notice around economic reports, watch your dome. All of a sudden, the bid and ask will drop. It'll just, and the thing will fly up one way or the other. And what they're doing is they're trying to create a euphoria. I got to get in, it's going up. I got to get in, it's too late. And then there's a big block of orders penetrating that area, just mopping them up. So retail trader is constantly buying into a bunch of selling all of a sudden, and that's where those widespread up bars come in. All of a sudden you start to see a phase go to the right, and that's what we'll really hone in on. And it's really important to watch this background. So that's what we're going to be honing in on here.
Steve's asked the question here, actually. Steve says, did the public actually know when the orders collapsed? Is there any way to
General public now. The market moves, but they have it's based on a movement more than anything. So that's what we're here for, though, is to help you identify where they're placing their orders and how we can take advantage of that. You know, you'll notice that really pay attention to your dome and watch those orders, and they'll disappear on you, and the price will take off one way or the other. Now,
Can I just quickly clarify something?
Sure.
You mentioned the DOM, but don't stop traders here.
Sure.
So you can just clarify what a DOM is.
Yeah, trading dome would be something you execute your orders in. In the futures market, they have you can actually just there's price. Then on the right side, you'll see the bid and the ask. The left side, you'll see the bid. Right side, you'll see the ask. And you'll see all the orders in there. They come and go. You know, they play games with it, sure. And, you know, they might put a big order in here. Price will start going up to it. They'll take it out. Put it up here, go up to it, and they'll take it out. I see that a lot in the softs, the commodities, and a little thinner traded stuff. So it's actually the trading dome that I'm referring to. And that's what helps move that price around. You can really manipulate it back and forth there. So the background volume and price spread are extremely important. And what we'll do is look for a confluence of key levels. So we'll really start with the left side and look over to the right and see how it's affecting things on the right. And then further over to the right, as it starts to unfold in those areas, you'll see specific things happen. It's uncanny how it happens. It's uncannily accurate once you get those levels. All of a sudden, you'll start to see widespread down bars into those areas. It'll start testing, or widespread up bars. All of a sudden, you start to see up thrust. And it's almost a no-brainer to once you spot those levels. So key levels and trigger numbers here is what I'm going to really hone in on. 200 plus bars back. That's better. Yeah, I go 200 bars back. The monthly chart, I'm a little less, but 200 plus bars are good. Utilize multiple time frames. I'm going to show you some examples on the monthly, weekly, and daily. The 240 to 60 is real crucial. 60 minutes real crucial for the intraday if you're intraday trading. But always pay attention to what the institutions are going to be doing off those weekly, daily, and monthly levels. They're going to come in and start slamming things specifically in those levels. The smaller time frames, the deeper the background, aka more bars. Of course, you're going to, with the 60-minute, you're going to have to look a little deeper back because, 60-minute bars. So what we'll do is you track the numbers on what I do is I track them on a spreadsheet, and I correlate them with common numbers on each time frame. So I'll take a monthly, I'll do my routine, I'll put them on a spreadsheet, all the numbers. Do the weekly, put them all on there. And as soon as these start to gel and I start to see the confluence of numbers, I stick with those. And then I adjust them as the market unfolds. If it's a monthly or weekly, you don't have to adjust them too much. Daily, not too much. 60, 240, you start to adjust a little more. And then watch how these react within certain areas. I'm going to be redundant about that and keep talking about that there, but make sure it's a good idea to track. And they're used as entries, stops, and possible exits, and really like to stress the importance of having a pre-planned approach before a price gets there. So you know exactly what you're looking for, where you're going to want. And also it'll give you an idea of where your target will be based on these levels. So if you do this ahead of time, as it's unfolding, you'll have a specific game plan in mind, so you'll be anticipating a move and reacting to something that you have pre-planned according to what's going to happen on the chart as it unfolds in front of you, so you let the market tell you what to do, as opposed to, yeah, it's moving up, I got to get in. Or it's moving down, I got to get out, I'm going to get hammered. So let's go into the finding the blocks of orders. I did some lines here, and we'll just scroll through one at a time. And what I have here is we have a widespread down bar, massive volume, okay, so I took the low, mark it off. There's a nice low over here. It makes a lot of sense. So where do you think I'll be marking the next line? I'm going to go on to the next slide. You all got the cheat sheet in front of you. So where do y'all think I might place my next line on this widespread or massive volume? Yeah, I'm going to put it up here. Widespread up bar. I'm going to watch this top in here, so get rid of my pen. And the next one is the top of this bar. Look over to the right. Yeah, it came down, respected it a little. We had a little double bottom, or a little 2-bar reversal, and then it's back up on the highs there. But, so I did the high and the low of the widespread bar with the most volume on this. Now, there's a third bar. Why did I put that there? Well, we have this massive volume here as well. There's 2 of them. This correlates with the close of this bar, and there's a low of this bar which actually had a little breach below it. So I'm going to take that, and there's a correlation here of that 2-bar reversal. So that really correlates. Now what's going to happen over here on the right edge when they get to these levels? I've got another one near the top. And the reason I took this top is, well, of course we got a double top here. And we have an upthrust right in these levels. So any type of upthrust, signs of weakness, I'd be looking to fade it right back down. If it comes slamming down to the low, you'd start to look for some possible strength in a trend change, of course. So I take these lines, these 4 numbers, I put them on a spreadsheet. And then I go on to the next chart. This would be, looks like we've got ourselves a daily chart here. Yeah, daily chart here. And I went to the massive widespread down bar here. Massive volume, that is. So actually the spread isn't that massive, it's the volume that caught my attention. So I'm not only marking widespread uppers and down bars, but I'm actually noting the volume too. So we have the most volume on the chart right down here. We have another, go to the second largest bar besides the right edge of the chart. I took the top of that. Now we have a bracket in here. And why didn't I take the bottom of that low of this widespread bar here? Why wouldn't I want to choose that one? Exactly. Yeah, it's already been, we've already spotted that area, so really no reason to do it. Yeah, try to keep it simple. Now we've got another low here which I took, which is a high volume spread here, and it's correlating with this low here where they actually tested it and took off. And why do you think I took this? I put it up here on this top here. You're wondering, well, where's the volume? Why'd you put it up there? You see what's going on? Let me draw it out for you. See what's going on right here? See how it's above that level? So there was a small accumulation right here. There's a double bottom. It just jumped the resistance level, and it came right back down and tested it. Can you all see that? It went up, right back down, tested it, and took off. So that, I call it the creek. It's, Richard Wyckoff does it a little more specific than I do, but that's what I consider a creek, as it's doing a double bottom and then jumping out. So they're jumping over an area that used to be resistance, now becomes support. And if they pull back on low volume, that's an excellent signal to grab. That's the reason I grab this line, because if it comes back, it comes back to it, starts to show signs of weakness or strength, that's good stuff. Yeah, we have another area in here. I took the massive volume and all the testing that was in this level. And if it goes back up to it, well, start to look for some weakness and watch it roll right back over and test over in here. Then I took the top. Now we've got 7 solid levels here. To look for specific things that happen on the right edge, you correlate that with the monthly. Put them on a spreadsheet. Now we have a weekly chart here. And then the top widespread bar. Look to the right. How does it? Is it a coincidence that this happened over here? I'm basing it off of this. Here and stop down move, and then it jumped right over the creek. Yeah, that's good stuff. It comes right back down and tests it. You get a nice signal here, and off it goes to challenge that top. So it's not a coincidence that that happened on the right edge.
The old software.
Yeah, it's the RT3, isn't it? Yeah. Yeah, I have a daily video that comes out, and it's on my spreadsheet, and it's something I maintain on a daily basis. And it is dynamic. It is dynamic. It does change when I'm intraday trading. I'm looking at the 60 and a little smaller time frames. This is daily, weekly, pretty powerful stuff on the swing trading aspect of it. But when you get into these levels on the daily, intraday-wise, really pay attention, because there's some big players are going to be stepping in. There's going to be a lot of traffic, and some principles will show up of no supply, imbalance of supply and demand for sure, typically in these areas. Let's move on to see this widespread, massive volume here. It's pretty narrow spread. Well, look what happened in the background. A little trap move right here. That correlates with the bottom as well. And here, it's no surprise those things happen. And again, I look at the massive volume, and then I look around those areas, see what's really going on. Up respected it, came down, tested it, and up it went. Now sitting at the full top there. So I took the high of that up thrust, because it makes sense that there's weakness up there. It would grew from it. So anytime you see weakness back up to 86, well, there was supply, a lot of supply up there. Is it still there? Well, it'll show us on the chart if it is. And really pay attention to these numbers and maintain them throughout the week. If you're dealing with monthly, weekly, and daily charts in swing trading, you don't have to do it as much. The question was, does it apply to any market? Yeah, it applies to anything that has price spread and volume. You'll be able to see the imbalance in where these blocks of orders will start to show up on the charts. So, yeah, the question was, is it what day of the week is it best? What I do is on a weekend, I do a thorough analysis, but the nice thing is it's kind of like building a house. You're building a foundation of numbers, of solid key levels, and then you just, as soon as you get those levels, they don't, monthly, weekly, and daily, they're not going to change a whole lot. And as the intraday, as the day progresses, or the week progresses, you start to adjust, fine-tuning things as you go, but it's more of adding to the key numbers and then correlating them with what you got already. So, for instance, I'm looking at, let's say I have a solid number at 1329.75 on the S&Ps, and I see intraday a lot of resistance at say 1328. I'll know that there's a nice level in there between 1328 to 1330, and if I see some weakness within those 2 points, I can take advantage of it. I don't have to specifically hit that particular number. So it's a zone. I'm looking at zones as opposed to, I'm just going to take it right at 1329.75. If it doesn't go there, I don't get filled. So I'm going to wait for, that way I won't miss a trade when the solid principle occurs in those zones. So now really encourage you to go over and over. It's something you'll have to practice over and over. But what I found, if I can two weeks later, 3 weeks later, see how the chart's reacting to that. And then you'll know if you're doing it proper or not as well. So I really encourage you to practice that. Keep them on the charts, take pictures, and then check on them a little later as well. It'll be a great thing to get you up to speed on them. Now, what to look for in these specific areas, that's what I was referring to earlier. Climactic action, you typically get thrust in those areas. It'll really spike it, and all of a sudden there will be an order imbalance. You know, ask yourself, well, is it an effort to rise or distribute, or when it's falling, is it an effort to accumulate, or are they just going to go crash into the floor? That's something we have to wait, watch for the next bar, let the market tell us what's going to happen next. So this will help you find where it'll test or up thrust as well. And it'll pinpoint areas for a pre-approach plan. I really need to stress that over and over. Always have so the signals to look for long. Tester after climactic action into support and an effort to rise. Basically, you don't want to catch it as it's accumulating. We want to have it prove itself, pop it out, pull back and then take a ride with the trend. There's also something I picked up through Tom Williams in the Master of the Markets book, is the gap down shakeout, and it's something I've hung my hat on, and it's pretty powerful stuff. I can't recall what page it was. Right out of the Master of the Markets book, though. It's something. Don't reinvent the wheel. It's already out there for you. Matter of fact, a little side note on the Master of the Markets book. Tom talks about, well, when this happens, that happens. Well, there's he's not saying trade it like this and exactly get in and get out here. He's basically building up the principle of an action-reaction. So when you see that, you can actually develop trades around those solid principles. But that's something we can talk about on a side note there. So it's a gap down shakeout on a double bottom or a new low. I'm going to show you some examples as we go along here. Signals to look for short, upthrust after climactic action into the upside with a double top. It's a bit aggressive, but it's a great way to catch it right before the trend. And tomorrow we're going to go over some examples of when you do see these things happening. Well, how can you lock it in safely and try to ride it on down? So I'm going to actually show you how to utilize multiple time frames tomorrow to take advantage of some of these extremes, like the gap down shakeout and the upthrust after climactic action. No demand after climactic action into resistance with the double top. Again, it's a bit aggressive when it comes to not waiting for the trend, but in specific areas, it's good stuff. Upthrust after a fall through support. That's a nice conservative way to get in, and a no demand after falling through support. Let's go ahead and take a look at a long example here. We've got a widespread down bar. The next bar is a shakeout with massive volume. What I do, as soon as I see that, my radar is up. Okay, what's happening here? What's happening next? I see an up bar, another higher high, another higher high. Well, okay, it's starting to go up. There's a lower low. Up a little higher. Well, there's another lower low. Let's see. Okay, well, this area now, I'm going to put a line over there. And I call that the creek, but that's just my way of remembering that it was resistance, and if it breaks through, it becomes support. Now, the real kicker here is when you see massive volume, then you see this, and it comes right back down here. What do you notice about that bar, as relatively speaking, as opposed to the bar over here? Can you all see that? It revisits the widespread down bar, relatively lighter volume. Sure, it looks heavy here, but relatively speaking, it's in the same area. What had happened is they spiked it down, they started mopping it up, buying it. Everybody up here is panicked out. They're selling, everybody. Well, did they do the campaign good enough? Did they buy them up, or are there more sellers up here? Every time it rises back up, we want to drive it. coming out, you drop it right back down, back into this massive volume here. Let's scare them out some more. Yeah. There's not as many sellers left. I think we got rid of them over in here. That's what that's telling us right there. It's telling us a story that we've got absorption. They're really trying to mop up the selling. They bring it up just enough, tease them about, it's coming up, it's coming up. You want to get out now? You want to get out now? You can get it out for a little loss or maybe break even. Yeah, not too many people were eager to drop it down. Let's put it back down in those areas and really scare them out. There's not too many people panicking anymore. You don't get long there, but that's a nice radar. So, okay, as soon as it pops over here.
It's normally a real scary market.
Yeah.
Yeah, that's one of Tom's favorite songs that you're talking about right there. Tom, I won't touch it.
Yeah, that's where I picked up the gap down shakeout from Tom. It's the same idea. Psychologically, they're being put under pressure, and then all of a sudden one day it gaps down on them. You say, uh-oh, yeah. Trap move. It's common. It's something that happens on a regular basis on daily. Yeah, intraday S&Ps will wiggle it up, or wiggle it at a test area, and then 10 minutes later, boom, spike you. And that's the true sign of strength usually. That one last little shakeout. And yeah, exactly. Yeah.
This is also a spring.
Yeah.
Dips underneath that low from the
Exactly.
And fails to go any further down, indicating that there is a lack of supply.
You see how it takes off up over here? And you see this bar here? Here's a gap down shakeout bar. Is exactly what I'm all over this. And the markets look Dow, yeah, and the Dow's down 200 points. In the markets, I'm looking for longs. The market's on an uptrend, but it happened to be down 200 points. I start looking for gap down shakeout bars, and I'll buy them at the last 10 minutes. And my expectation is it's going to gap up the next day. If it doesn't, then I get out. But as soon as you see it jump this area up in here, you start looking for test or low volume down bars or a gap down shakeout. You go over your charts, look at those gap down shakeout bars. Just like Gavin was talking about, back testing these end of rising markets and the bag holding and how many times they'll turn. You'll be amazed.
Very sure. There was a question came in from, let me just repeat it, from Lance. He says, well, look, that looks to him like a hidden upthrust, but because the strength in the background, that's in the wrong place. That should be weakness. So could you explain why that is not really a genuine hidden upthrust? It looks like one, but it's got strength in the background.
Yeah, exactly. Because there's so much strength in the background, that upthrust is really in the wrong spot. It's a polar bear in Hawaii.
That's what, yeah.
So if you, when you see upthrust, you really want to see widespread up bars followed by a drifting action. It's a phenomenon that happens all the time. And what it is they're rushing, getting people excited to go long, and then they end up with a basket with one crab, so to speak. So as soon as you see it jump over here, here's the kicker. The nice thing is the training system does it all for you. The bars are blue. It turned up over here. See how it closed above that bar? The bar's blue. All I have to do is wait for low volume down bars. Here's the test right here. Low volume down bar. expectation is should do this within 1 to 3 bars. If it doesn't do that within 1 to 3 bars, well, something's not right, and I probably should get out before it takes my stop out. That's one thing I don't like to do is I have a hard stop in, but I don't want it to really hit my hard stop. I want to let the market tell me to get out before I even stop. Try to cut my losses quicker that way. And you got to have those hard stops in there just in case. This chart, here's the whole picture example. It's just actually, here's some possible accumulation in one fell swoop here on these charts. How am I doing on time? Great. Let's walk through this thoroughly here. Yeah, there's your wide spread up bar. Here's your up thrust. So notice how it floats up some more. Just keep going. Sorry, that's what I was talking about. The up thrust is pretty aggressive if you try to grab it before it changes trend. It immediately comes down and tests it. So what I did is I marked that area as an area of support. So it looks like, well, they drove it up, they up thrusted it a little, but they might be absorbing, not quite sure. We'll have to wait and see. And they bring it up some more, another widespread up bar. Now it looks like they've withdrawn from it. A widespread up bar withdrew, and then boom. So anybody that's long up in here, a little underwater. And this is the kicker. Because it closed below the resistance level, or support level, and now it becomes resistance. So this line also, let me digress here. See this bar right here? See, I didn't break that. So I marked that as well as support. This one closed at it, and this one closed below it. And as soon as it goes back up, see these up thrusts? Excellent. This is the cause. This is the effect. So you have these already on the chart. When it goes back up to those levels, you see the VSA principle set up. Down it goes. Now, we're going into an area where it started to hold and bounce. And then another slice through. So now we've got another trap move. Might be going up, might be going up. No. Now, all these people that are long in here just got grinded and grinded, and all of a sudden now they're getting panicked out again. Because the market slapped sideways. Now what do we have? We have a widespread down bar followed by shakeout. Just like the previous chart. Widespread down bar followed by shakeout. It's something you'll see over and over and over again. Went up, boom, to relatively lower volume. It's no coincidence. It's a phenomenon that happens over and over and over. It's very redundant, and as soon as you get it, you'll start to see them do the same things over and over and over again. So it did close above. Well, looks like some supply has dried up. Now they're testing. But you notice these low volume down bars? That's a test. Well, you'd think, oh, it's supposed to go up. Well, why didn't it go up? Well, tests do fail. And you don't, that's the reason I don't rush out and just buy tests. I wait for them to take me into the trade. Here's another test. See how this one closed above it? Well, that one triggers you. It's a little aggressive because it's not over this resistance, which should become support. The next bar trades up, and that would have actually triggered me there. Place an order right above the high, a couple ticks above it. If it's truly strength, it'll take me in. Then I have an expectation, and if that expectation is not filled, I get out pretty early. Here's another one. This one triggered as well. And it instantly ran into that resistance in the background. It's no coincidence. Now what you'd be doing is you wait for a revisit from the climactic action low for no supply or those powerful gap down shakeout bars to confirm strength, and then look for an effort to rise. Again, this is aggressive. Those gap down shakeout bars. Aggressive. Or if you find some testing in here, if you got long down here, well, exactly. Yeah. It would be the low of this bar here. And now the gap shake down, gaps up, and all over it. But the object up above this resistance up in here now. So you see the expectation would be wide and spread up bar followed by the test. So you see it gaps down. Get rid of all this. The gap down shakeout bar followed by an up bar. That's excellent. Excellent sign of strength, and you'd expect it to take this top. But what I'm getting at here is what you'd really be looking for, the widespread up bar to push through this level. Now you're thinking, well, you just told me up bars are selling. Well, because of this in the background, and it looks like they were trying to have to look at it. Most likely it's turned over now. But if that did happen, that would prove that this area was accumulated successfully and that they pushed it up and immediately start coming down on low volume. As soon as you start to see that, it's probably going to keep going up. So there's really, when you see a widespread up bar, ask yourself what's going to happen next. Once it starts doing this, what do you suppose might happen next? Let's put the volume in there for you. What do you suppose might happen next if you see a widespread up bar? Now, let me pull my, actually I can't pull paint. And you have this in the background. It is that. That's typically, if it starts to push up and come right back down on low volume, there's usually an effort to rise from an area over to the left. You really pay attention to. So widespread up bars, widespread down bars, a couple of things to really pay attention to. Did it go down on low volume right after? Or Is it lightening up and going sideways and doing this kind of thing? It's kind of sideways, choppy, light volume up bars, up thrusting. That's going to give you a sign that it's probably going to roll over. Yeah, that's two specific things to really look for. There are times it'll just keep going, but more often than not, you're going to see a lot of this. Ask yourself, what's happening in the background? Is it pushing through something? Or is it usually the market's been on an uptrend for a while, and then you see that. Typically, when you see this, you have some type of accumulation behind you. So when I think of accumulation and distribution, I think of M's and W's. What creates those M's? Up thrust and things of that nature, and then it'll start to come down and do a little testing. A lot of the times you'll see no demands and up thrust that second half. If it falls through, that's when you look for VSA signals. So really encourage you to look for widespread down bars, widespread up bars. Try to find those areas where there's before this even happens. Try to identify what's going to happen here. Not to really tune in with what's the phases. Does that make sense? So widespread up bar. I'll start actually looking at that as it just took out a high. It takes out two of them. That's the kicker for me. That's probably going to be support. And they're going to either up thrust at no demand, and then there's going to be a widespread down bar typically. And what does that typically do? That traps in the traders that got excited up in here. And they held it up just long enough to short it into it and then slam them down. Now they're trapped, and everybody that's up in here is going to want to get desperately, and they'll try to bring it up just a little, and you'll usually see up thrust, no demands, and down it goes. W's and M. Talk about the everything that we just went through here. Understand why the smart money needs to move the market. We know they like to move things in opposite directions before it goes back in their favor, and they have to do that. Get back in their favored direction. If you have 100,000 contracts, you can't just start 50,000 contracts, 100,000 contracts. You just can't start buying when you decide to get in the market. It's going to run up on you, and who are you going to sell to? So they have that dilemma, and that's how they deal with it. And it really shows up on the charts, and we can trade it accordingly. So, thank you very much, smart money. So we can find these box of orders that will cause the market to show a specific BSA principle, imbalance of supply and demand. So use these trigger numbers to look for specific levels to show up and identify. I just show you 6 specific sets to enter the market. No demands and upthrust tests and gap and shakeouts. I showed you a few dynamics of that. where you could catch the no demand and up thrust as it's distributing, which, if you utilize multiple time frames and you're dealing with the daily chart, this is pretty crucial and very powerful stuff. You're dealing with the daily chart and it's downtrending, and you start to see distribution on a 60-minute chart, well, you could probably get in with the distribution phase because it's so powerful on the daily chart. It's naturally going to be distributing because that's what professional money is going to be doing, and that's a little less aggressive. But if the market is actually trending up and you're trying to get in with the take a few losses there. So the overall trend is really important to hone in on the intraday or the smaller time frames. Just want to elaborate on that a little. With the no demands and up thrust, if you wait for the trend, that double bottom here, let me write it out here, or double top, as soon as you wait for that part to break, and then it goes back up to it. It takes a lot of patience. You gotta wait for it. But it's a phenomenon that happens over and over and over again. And if you're looking at intraday wise, the 60-minute chart could be doing this. You get a gap, we got a widespread down bar, then we have a shakeout. Now the 5-minute chart, if you look at the 5-minute chart, you probably already see this. You think, oh, I can get long right here. Well, this is probably on a downtrend still. You're trying to get long here. What's going to happen is it's going to be doing this on the 5-minute over and over and over again, because it constantly accumulates and distributes. If you want to practice it, I wouldn't encourage you to go out and start trading the 1-minute chart, but if you really want to see the principles weave in and out, look at some 1-minute, 3-minute charts during the day, and you'll start to see these over and over again. But what I'm getting at is if the 60 minutes lined up and it's already jumped the area and then comes down and starts testing, well, you're going to find a 5-minute that's a part of the 5-minute that's popped out and starting the test. But doing it early, you're asking yourself, well, there's going to buy down here, I better get out up here. Buy down here, I better get out up here. No expectation to ride a trend. So really understand the larger phase that you're in and correlate it with the smaller one. If you can line those up, powerful stuff. If you don't line them up, if you're aware of it, you can take those smaller moves, as long as you're aware of it. It's just what will happen is they'll start to rise it up, and they'll want to drop it back down so you can take advantage of those small moves. That's intraday stuff. What I'd really encourage you is wait for the trend to change and then pop it. Take the test. So this is what I mean by 6 setups. The gap down shakeout, that's almost a no-brainer. You have your test after a widespread up bar and then after an effort to rise. Erase all here. So specifically, let me talk about it a little more thoroughly here. Just talking about up thrust like right there. If you're doing it on a smaller time frame, make sure the daily's down. If it's on a daily chart, is the weekly down? If not, well, you probably should wait for it to roll over and slice down and then come back up and up thrust, just like the examples I was showing you earlier on the chart. That way, it fell through and then banged its head, and the poor boy drowns. But so that's 1. That's 2. Then you can do the same exact thing. a wide spread up bar. All of a sudden you get a no demand. Is that on a 60 or a daily, and is the weekly down? If it's on the daily, is the weekly down? I feel pretty comfortable about that. But if it's not, we'll stand aside. If the daily's down and that's on a 60, I'll be all over it. But if it's not, well, I'm going to back off. To what you it's you say the daily's up, and all of a sudden you start to get this. It slices through. Well, again, you got your no demands. It bumps its head, and the poor boy drowns. Same thing with the. It's a little more. Actually, distribution happens a lot faster than accumulation. Things can turn over on a weekly, a daily chart pretty quickly, a month, 2 months, where I've seen stocks accumulate for a year and a half to 2 years. You sit and wait and wait and wait, and then a trend change is powerful stuff. But, so when it comes to the accumulation part, I like to see the second bottom, that gap down shakeout. That'll be all over. I'm going to show you some examples. Let me show you examples tomorrow, I think, on some of this. Gap down shakeout bars. Matter of fact, look at the gold ETF on the daily chart and look for gap down shakeout bars and see what happens right after those. You'll be surprised. Then there's the test after it rises. If you take nothing from this presentation, think about gap down shakeout bars. And,
so when it comes back up to resistance, you're really looking for a BSA sell signal. And that doesn't happen and it keeps going.
then I changed my opinion. The question was, when it comes into an area of resistance, I'm looking for specific BSA principles to set up. And if it just keeps going, what do? I change my opinion and I start looking for tests. Because resistance, once it gets broken, becomes support. And usually it's pretty significant. There's an effort to get through there. It just kind of meanders and starts upthrusting and no demands. It'll be a little leery. It's going to roll back over. But you get a widespread bar, or even stronger. Say you get an end of a rising market, and then all of a sudden it comes down, immediately test it. That's strong stuff. You get a widespread up bar, all of a sudden they start capping it, and then they test it. You got your support here. Into the rising market's going to roll it up pretty quickly. And that happens on smaller time frames. It's real powerful. You see end of rising market on a weekly or daily, and it's probably not a good idea to mess with it long at all. But in smaller time frames, you see end of rising market followed by tests. That's good stuff.
Steve, you can sense the opinion from the room here. You think you should stop trading and become an artist?
Become an artist. They like my napkin drawings.
Give up the day job. Because you make Venice Beach.
There's my initials. That's me.
No, actually, the comments come in there. Very, very good
SP.
presentation.
Excellent.
Lance says, respect to you all. You have made me laugh today, and I suppose you all had fun whilst learning. Well done.
Excellent. Yeah, it's been a pleasure.